Yes, please.
So today we are looking at the purchase of goods. Purchase of goods as our next transaction. Transaction number 3. Purchase of goods. So in this scenario, the business is taking goods from suppliers, right? So let me make a diagram here to guide us. So if this is the business, B for business, the business is now getting the goods. So the goods are coming from a supplier, right? From a supplier. So this supplier is giving the business goods. But again, there are two scenarios. When we receive, or if the business receives the goods from the supplier, the business can decide to pay cash or check, or the business can decide to pay later. But then I think you would appreciate the first impact or effect this will have. So if a business is receiving goods from suppliers, dear professors, what do you think would be the first obvious effect on our assets, capital, or liability? I think Portia wanted to. Okay, Portia, go ahead.
So please, if you are receiving goods from our suppliers, one, there will be increase in our assets stock.
Great. That's very true. So there will be increase in asset stock because this time is the business receiving the goods. Prof. Akoli, you want to say something?
No, sir.
Okay. Great. Now, the second impact will be that, but then I indicated that the second impact really depends on whether the business paid money or didn't pay. So let's look at the first scenario. That's where the business paid cash. So the business paid cash or check. So in that case, we say that there will be an increase in asset stock. And because we paid money, the business paid money, there's going to be a decrease in that asset money. But then we don't say money, we say cash or bank, depending on what we use to pay or settle the supplier. Okay. On the other hand, if the business didn't pay, then it means the purchase was done on credit. So sometimes I refer to that as credit purchases. Okay, credit purchases. Then at that point, again, there will be increase in asset. But this time, there will be an increase in liability. And the name of that liability will be a creditor. Okay. Liability because we didn't pay the supplier. So we now owe the supplier. And if you owe an individual or a firm, that person or that firm becomes a creditor. I believe professors are okay with that. Great. Now let's go to our
Yes, please.
Yes, please.
Let's go to our fourth transaction. And that is acquisition or purchase of an asset. So this is where the business is buying an asset or purchasing an asset. Okay. So you can tell that this is also purchases, but this is not purchase of goods, but we are purchasing an asset, which could be land, building, vehicle, equipment, etc. So I think my professors again appreciate that we can purchase this asset using cash or bank, or we can purchase it on credit. Now the question is, when you purchase an asset, what impact or what effect are you looking at? Let's say the business buys a land what is that going to do to our equation or asset capital liability?
Sir, please, can you come again?
Yeah, so this transaction is where the business is buying an asset, right? Buying an asset other than goods, buying other assets or assets other than goods. So this time we are not purchasing goods, we are buying another asset like land, vehicle, equipment, machines, etc. So we want to know what will be the impact of such a transaction on our asset liability capital. Prof. Zoe, you want to try? Okay, I think Austin, our colleague, go ahead. Austin, I think your microphone might be having issues. We can't hear you. Oh, did any of you hear what Austin said? Austin, you can type in the chat if possible. Prof. Bridget, you want to share your idea? The business is purchasing an asset. In fact, take it like your family is buying an asset. Let's say daddy is going to buy a car, right? So what is it going to do to your asset or liability or capital? Are my professors confused? Prof. Oswell. Okay. So our colleague is suggesting that, okay, let me pick from Bridget and I'll read what our colleague said. Bridget, go ahead.
Sir, please, to increase in assets.
Exactly, increase in asset. Can you also tell us what is going to happen to the other? Because the effects are two. So if we have increase in assets, what again is going to happen?
Sir, please, increase in assets and capital.
Okay, so Prof. Bridget is suggesting increase in asset and increase in capital. Prof. Austin. Okay, this is from Prof. Akoli Mensah Augustine. He is saying that lower in asset capital, increase in asset stock, decrease in liability if the business pays for it. Wow, these are interesting thoughts. Professors, you are confusing me as your accounting teacher. So let's appreciate this, okay? So please follow keenly so that you don't miss any point, right? So if a business is buying an asset, which could be land, vehicle, furniture, or equipment, the first obvious impact or effect will be increase in asset, because then the business is going to get a land, the business is going to get a vehicle or whatever asset. So there will be an increase in asset. That's the first impact. The second impact depends on whether the business settled or paid for this asset using cash or bank, or they didn't pay, right? So if the business settled, right, or paid cash or a check, okay, then would have the increase in asset. So when you are given the question, the specific asset will be given, maybe land, fixtures, whatever. So you also put in increase in asset, maybe land or fixtures. Then because the business paid money, there will be a decrease asset, cash, or bank. So let me put either land or vehicle as an example. That's where the business paid money, right? If they didn't pay money, that means they bought the asset on credits. So on credit, then would have again increase in asset, whether land or vehicle or whatever asset they bought. And this time, because the business didn't pay, the business will owe the dealer, right? So there will be increase in liability. Okay, that will be the asset creditor. So if you are following, you can appreciate that if the business is buying something, be it goods or asset, right? Then you have to consider, did the business pay or did they do it on credit? On credit means they didn't pay. So if they paid, then the cash or bank is going to decrease, right? But if they didn't pay, then a liability will be in the picture. Any questions so far?
Okay.
Okay. Shall we move to the fifth transaction?
Yes, please.
The first transaction is acquisition of loan. The business is going to take a loan, acquisition or taking of loan, right? I want us to discuss this one. So let's use your family as an example. Your family goes to JCB Bank to take a loan of say 20,000 cedis. What are going to be the effect on the family? Remember, we are only focusing on assets, which are properties or resources, liabilities, which are debts or debts that the business has, and capital is what is coming from the owners. So if a family or a business go to the bank to take a loan, starting from the family, what will be the impact on the family's asset or liabilities or capital? Just share your view. Yeah, Prof. Portia, go ahead. Let me hear it.
So please, since the family have gone for a loan into the flight, they've gone for a loan, so there will be increase in assets, bank.
Mhm.
The money in their bank accounts will increase.
Okay. What is the other impact it's going to have as well?
And also there will be increase in liabilities in brackets. That will be the creditors, bank.
Okay. Thank you. I think there are some very good points in there. Please, any other point or suggestion? Oh, please, professors, talk to me. Prof. Oswell, talk to me. If your family should go for a loan,
There'll be increase in liability.
okay, so Prof. Oswell indicates that there will be increase in liability. Great. But we are looking for two effects, right? So if there's increase in liability, what is the other effect as well? Okay, I think I appreciate your point so far. So yes, when the business goes for a loan, remember the loan will come in the form of money, right? So the business will be getting cash, or if it's put in a bank account, there'll be money in the bank. So there will be increase in asset, cash, or bank. So that's perfect. The other effect will be that the business will also have to acknowledge that they are owing the bank because the loan is not for free. So if you are owing a bank, then that will be a liability. So there will be increase in liability loan. So whilst your money, that's your cash or your bank is increasing, you are also increasing a liability in the form of what? A loan. So the two effects will be increase in asset, cash or bank, and as well increase in liability loan. Please, do you have questions on this, or do you fully understand? Okay, Prof. Josephine, go ahead.
Sir, please, did you say increase in assets or increase in liability loan?
So increase in assets, okay, that's a cash or bank, and a corresponding increase in liability loan. So there's the point we have to note when the business takes a loan from a bank. So Prof. Josephine, I hope you are okay with it now.
Yes, please. Thank you.
Okay. So professors, we are going gradually. We've now done how many? 5. We have at least 5 more to go. So if you have questions on the 5 we've done earlier, you can prompt me. Just a quick review. We've done investment by the owner, sale of goods by the business, purchase of goods by the business, purchase of an asset, and then we just finished with acquiring a loan or acquisition of a loan. Okay. The next one, number 6, is settlement of a liability. Okay. So we all appreciate that a liability means you are owing, right? You have a financial obligation, you have a debt to settle. So if a business is settling a liability, so I always prefer to use your daily life experiences. Your family is supposed to settle a debt or a liability. Then what is going to be the two effects, right? Because your family would have to settle that liability with money, or money in the house, that's cash, or money in the bank. Yeah, Prof. Portia is ready with an answer. I wish somebody else could share a thought before Prof. Portia. Prof. Francis. Prof. Francis Oklu. Okay, I think I have something in the chat. Let me see what is in the chat. Decrease in asset and decrease in liability. Wow, I love that from Akoli Mensah. Okay, let me hear from Portia. I'll hear from Austin, and then. So Portia, let me hear you.
Okay, say there will be decrease in cash or decrease in assets, cash or bank by the family, and there will be decrease in liability loan.
Okay, that's awesome. Prof. Austin, can I hear your thoughts too? Okay, I think he shares the same thought as expressed by Prof. Portia and Akoli Augustine. So we have 2 Akolis in the class, Augustine and Austin. Wow. Okay. So let me get that on the screen. So yes, if the business is settling a liability, then there will be decrease in the liability, right? Decrease in liability, because the business is paying the debt. So there will be decrease in the debt. So this liability can be loan or it can be a creditor, because creditors are also liabilities, right? Or any other liability. Then there will also be a decrease in assets, mostly cash or bank. But interestingly, a business can also use other fixed assets to settle liabilities. For example, a business can use its vehicle to settle a liability. So in that case, there will be decrease in asset vehicle, right? So depending on whatever the dynamics are, you should be able to gather your thoughts in there. Okay, I think we'll go to the seventh one. The seventh transaction. And the seventh transaction is payment of expense. I want to believe professors remember when we looked at expenses to be the costs incurred for providing goods or rendering services to make profit. And examples of them are rent, electricity bills, telephone bills, etc. So dear professors, if a business pays rent, what is going to be the impact? Prof. Francis, I will be very glad if you can share your thoughts on this. Okay, so I have Portia and Josephine waiting for me. Okay, Prof. Francis, let me just hear hello from you so that I know you are there with us. Okay.
Hello. So please the question again.
So my question is, if a business pays an expense, for example, rent, what impact is it going to have on the business in terms of the business losing something or gaining something? Or let me make it simple. If daddy, for instance, daddy pays rent, what can you say about it in terms of daddy losing something and gaining something? Okay, I think I see something. Oh, go ahead, feel free, go ahead. We are listening to you. Okay, so I've seen something from Francis in the chat. Well noted, Francis. It's normal, right? So I would have pushed you to say something, but I think I'll hold on. Okay. Because I'm sure you are now gathering your thoughts, so I won't push you further. Those professors who have their hand up, Portia, Josephine, and Apollo, please, the three of you should unmute and tell me what you want to say together.
Okay, so there'll be decrease in assets. That will be the cash or bank, and there'll be decrease in liability and expense.
Thank you, my future accountant, for trying to confuse us. That's why. That's why I asked all of you to say it together. So you see, this is a bit complex, so I need to explain. Now, if you remember, I indicated to you the impact expenses have on the accounting equation. So you remember the extended version of the accounting equation where we had to put in expense and income. I don't know if you remember that bit. Yes, here it is. Right. So ideally, when expense comes into the picture, the ultimate effect will be on capital. Remember, the two effects we are looking at is either on the asset, capital, or liability, right? So anytime expenses come in the picture, you know that the net effect goes on to capital. Now, having said that, I think you all got one correct. One of the effect correct, that's there will be decrease in asset because we are making a payment for an expense. So the business is going to use money to pay for that expense, be it rent, wages, or whatever. So there will be decrease in asset, cash, or bank. But then the other effect will be on capital. And the question is, would it increase capital or decrease capital? I think I'll get that reaction when we continue in the next session. So gather your thoughts. Let's meet in the next session. This session is almost up. So when we meet, I'll take your responses. Akoli and Portia, take your responses from there. Okay, so Francis, join us so that you don't miss the point. So you gather your thoughts very well and be able to share your opinion when necessary. So let's meet in the second session. Thank you, professors.
Thank you too.